Hello children, Veena ma'am here. Today we are going to do a new topic, adjustment entry. That is past adjustments. Past adjustment, this topic is very important because many a times it has come for the exams. Every exam generally. Either for 1 mark or for 3 marks. So this topic is past adjustment. Past adjustment is also known as adjustment entry. It is also adjustment entry. Now what is it about? Generally a hint of this we have already done in 11th standard. Yaad hai 11th standard mein we had done rectification of errors. What is rectification of errors? You made a mistake and then you rectified that mistake by giving one entry. Right? This is also the same thing. Now the partners are there. Partners have some clause in their partnership deed. And in this deed, there is they have not followed the deed. They have not read the clause properly. So maybe there is an error that has taken place. Now let's see what are these type of errors that have taken place. We will see few examples. First is A, B are partners. This is one type of error that I'm talking about. A and B are partners. Their ratio, their profit sharing ratio is clearly mentioned in the deed. It is 3:2. This is there in the deed. But when the net profit is calculated, right? You have calculated the net profit. Now you will be distributing this profit among the partners. By mistake, the partners have divided it equally. This is the mistake that has taken place. Okay? Instead of giving the profit in the ratio of 3:2, they have divided the profit equally. First thing. Second thing is when the partners have forgotten to give certain clause. That is, if suppose A and B are partners. A is supposed to get salary, whereas B is supposed to get some commission. They have not done this. Instead of giving salary to A and giving commission to B, they have distributed the profit before giving this. Right? This is one type of error. Third one is when there is retrospective effect. Retrospective effect. Retrospective effect is, now I'll take an example. A, B, C are partners. 3 partners are there. And from past 3 years, they are running the business. And from past 3 years, their profit was 3:2:1. This is from past 3 years, they have distributed this profit. 3:2:1. But in the 4th year, right? In the 4th year, they observe that C is putting in much of effort. Or C has got more capital. So now C says that I want equal share. He is working also more. His capital is also more. So now he is demanding equal share for the past 3 years also. In the past 3 years, he got only 1 share, whereas B got 2, A got 3. But now C is demanding for equal share right from past 3 years. So this is retrospective, where both the partners agree. They say yes, he has worked a lot, his capital is also more, so let us give him equal share. So the other partners, A and B, have also agreed to it. So when these people have agreed, now the 4th year, you're going to make the share equal. And also, for the past 3 years, whatever he has lost his share of profit, we are going to give him. This is one type of problem that we will be doing. So these are the 3 types of errors that generally takes place. You have a deed, but you have not followed the deed. It might so happen that interest on capital, interest on drawings is mentioned, but you have not charged or you have not paid the interest on drawing, interest on capital. Okay, so these are the types of errors that we'll be seeing. The first illustration that we'll be doing is illustration number 43. I am using edition 2025. So as per 2025, the question number illustration 43. Illustration 43 is on page 1.58. I'll read out the question. Those who don't have the book, doesn't matter. I'm going to write it on the board, the details of the problem. Question number 43. P and Q are partners sharing profits equally. So there are two partners, P and Q. This is illustration 43, page number 1.58. And their share is equal. They have equal profit sharing ratio. Their fixed capital given to us is 1,50,000. So they have a fixed capital. It is 1,50,000. This is their capital. The deed provided for interest on capital at the rate of 10% per annum. Now there is interest on capital which is 10%. There is a deed. For the year ended 31st March 2016, profits of the firm were distributed without providing interest on capital. So we have not given the interest on capital. We have just divided the profit. But how much was the interest on capital which we had to give? So the first part is interest on capital of P is 1 lakh into 10 by 100. 10%, that is 10,000. And for B, 1 lakh into, it is 50,000 for him. 50,000 into 10 by 100, that is 5,000. Total interest on capital that we had to give is 15,000. Okay? We are going to make an adjustment table for this. The first method that we are going to use for this is debit and credit method. With this, I'm going to tell you. So first see the format of this table. The name is adjustment table. It is adjustment table. Okay. This is particulars. First column will be particulars. Second column, because they have fixed capital, we are going to write capital transfer of the amount will be to current account. So P's current account. Third column will be Q's current account. And this will be the total, that is firm. Okay. Under this again, you will have two, that is debit and credit. Debit and credit. Again, two columns will be there, debit and credit. When it is debit for the partner, it will be credit for the firm, which means if it is a loss or expense for the partner, it will be gain for the firm. Or if it is a loss for the firm, it will be gain for the partner. Okay. So in this case, let's check. Interest on capital was 10,000 and 5,000. We had to give this. So the firm gave interest on capital. Firm had not given this interest on capital. Now the firm is going to give interest on capital to the partners. So it is a gain for the partners. It is an income for the partners. How much is P's? 10,000. And for Q, it is 5,000. Total 15,000 if the partners have got. This money has been deducted from the firm, which means on debit hand side. 15,000. First point got it right? Now this is a loss for the firm. But ultimately, this loss will be borne by whom? By the partners. This loss will be borne by the partners. So this 15,000, the loss will be borne by the partners. The partners are equal partners. So the amount, that is the loss divided between the two partners, will be 7,500 and 7,500. Loss divided among partners. In which ratio? 1:1 ratio. Now we are going to check this. P was supposed to get 10,000, 7,500 we have taken out. So how much is there on the credit hand side additional? It is 2,500. So 2,500 he will be getting credit. Okay. Here also 5,000 he got, but 7,500 is the loss that he will bear. So 7,500 minus 5,000, 2,500 is on the debit hand side. So we will debit. Okay, so this is the final answer to the journal entry. So this is generally for 1 mark you'll get. It will not be more than 1 mark, only 1 mark question. So the journal entry for this will be, first is 2,500, we have seen his debit side is more. He will be debited because this amount will be deducted from him. His capital will be reduced. So Q's current account debit to P's current account. 2,500, 2,500. Narration is compulsory. Even though I am not writing the narration, you please write the narration for every journal entry that you write. Take down this. The next that we are going to do is illustration number 44, page number 1.59. So this is illustration number 44. Page number is 1.59. I will be writing the synopsis, that is the details of this. Let me read out. XYZ shared profits of 1,50,000. There are 3 partners, X, Y, Z. They shared 1,50,000 in the ratio of 2:2:1. So what is their ratio? 2:2:1. This is their ratio. Partnership deed did not specify the profit sharing ratio. Pass the journal entry. Now there is no deed which says there is no profit sharing ratio deed over here. Which means if there is no deed, their share will be actually 1:1:1. But they have already divided this net profit 1,50,000 in this ratio. Now we will see the other method, that is they have given it wrongly, and if we give it correctly, what will be the difference? Again we will draw the past adjustment table. So this is adjustment table. First is particulars. First column, particulars. Second column, X. X is capital account. Y is capital account. Z is capital account. And this is firm. Okay, so in the first part we are going to see what the wrong profit is distributed. So first is profit divided wrongly. In which ratio? In 2:2:1 ratio. Okay, so which means 1,50,000 is divided into 2:2:1. 1,50,000 into 2/5. This is for X is capital. This is how we do the calculation. It is 2 divided by 5. So he will get is 60,000. His is also 60,000 because the ratio is 2. Z's is 1. Half of their ratio. So half of this is how much? 30,000. So total is how much? 1,50,000. Okay. Now we will see the correct. What we had to do. So profit to be correctly divided, which will be in equal ratio. So 1,50,000 divided by 3, all will get equal. 1,50,000 divided by 3. So each will get 50,000. X will get 50,000. This is what he is supposed to get. 50,000 and 50,000. Total 1,50,000. Okay. So this is the wrong entry and this is the correct entry. अभी इसको compare करते हैं. Let us compare this. Wrongly he got 60,000. He was supposed to get 10,000. We are going to minus 10,000 from his capital account. We are going to take out 10,000. If I want to reduce his capital, I will debit. So debit by 10,000. Okay. He got 60,000 whereas he also was supposed to get only 50,000. So debit from him also 10,000. Minus 10,000. He got 30,000, whereas he was supposed to get 50,000. He will get more, how much? 20,000. So his capital will be increased. So if the capital increases, we are going to credit. So credit with 20,000. Now let's see the journal entry. Very easy. This is also for 1 mark. This is not a big question, not a tough question. This also generally comes for MCQs. So the journal entry over here will be excess capital account debit 10,000, Y's capital account debit 10,000 to Z's capital account 20,000. Got this? So this is a very simple one. Next one we are going to do a tough one. Step by step we are going to do tough ones. Okay? Copy down this. Illustration is 45. Question page number is 1.59. On 31st March 2019, the capital balances of Asha, Nisha and Disha. The names are Asha, Nisha and Disha. These are the 3 partners. After making the adjustments, so after making the adjustments for profit and drawings were 1,50,000, 1,20,000 and 90,000. Underline this if you people have this question with you. Underline after making adjustments, which means this is clearly the closing capital. And remember, interest on capital is always given on the opening capital. So the first thing that we have to do is we have to find out the opening capital. So the closing capital given to us is 1,50,000, 1,20,000 and 90,000. Subsequently, it was discovered that the interest on capital and interest on drawings were omitted. We have not given interest on capital and we have not even charged interest on drawings. The partners were entitled to interest on capital. So we were supposed to give interest on capital 10%. Interest on drawings is to be charged 10% per annum. I have circled the per annum. I'll tell you. The drawings during the year were 50,000, 60,000, 30,000. So the drawings is 50,000, 60,000 and 30,000. The net profit for the year was 1 lakh. And the profit sharing ratio is 2:2:1. This is the profit sharing ratio. But first, we need to find out the opening capital. So let's find out the opening capital of all 3. So this is the table for opening capital. I have already told you all when we did this chapter, interest on capital, when we were doing this topic, I have already shown you how to calculate the opening capital. You can just go to the video and just check that. So these are the 3 partners. First column will be particulars, Asha, Nisha and Disha. Okay, so particulars, this is Asha, Nisha and Disha. Fine. Closing capital. Take the closing capital. How much is the closing capital? It is 1,50,000, 1,20,000 and 90. 1,50,000, 1,20,000 and 90,000. Okay. So to this we are going to add the drawings. Drawings will be added back. How much are the drawings? 50,000, 60,000 and 30,000. So the total now is 2 lakhs. This is 1,80,000 and this is 1,20,000. Fine. The net profit, we will be deducting the net profit. We have to minus the profit share. The thing that we had added, we will minus, and the thing that item that we had deducted will be added back. We had deducted drawings, so we need to add back that. We have given profit, so we need to minus that. Then we get the opening capital. Profit sharing ratio, 1 lakh was given in the ratio of 2:2:1. So 1 lakh take the total 4, 5, right? 5 twos are, so it is 20,000. Asha will get 20,000 into 2, 40,000. Nisha will get 20,000 into 2, 40,000, and half of this 20,000. We will be deducting this. So 2 lakh minus 40,000 is 1 lakh 60,000. 1 lakh 80 minus 40, 1 lakh 40,000. 1 lakh 20 minus 20, it is 1 lakh. So this is the opening capital. 10% is the interest on capital. So interest on capital is 10%. So which means this will be 16,000, 14,000 and 10,000. This is only one part. We yet have to do the adjustment table. Copy down this. Done? I'm going to erase this part. Okay, let's prepare the table now. We are going to prepare past adjustment table. So, past adjustment table. All three partners, Asha, Nisha, Disha. First is always the particulars. Okay? Then is Asha, Nisha, Disha and total. So, always keep the format as per the what is given in the book. It will be very easy and you will get marks also for this. Asha, write the rupees sign. Nisha, rupees. Disha, rupees. And total, rupees. Okay. First is, we have what all the partner is supposed to get and what is the error that has taken place. First is, we have given this net profit in the ratio of 2:2:1 without giving any interest on capital or charging interest on drawing. So the first part is profit distributed before adjustments. In which ratio we have distributed? 2:2:1. Before adjustment, we have given all the profits, that was 40,000, 40,000 and 20,000. So 40,000 we had given, 40,000 to Nisha and 20,000 to Disha. Total 1 lakh we had given. Now we are going to take it back, right? If we are going to take it back, debit and credit 1 lakh. We are going to reduce their capital with that amount because this was wrongly given. Now what is the correctly to be given with adjustments? What is first is IOC, 10% to each partner. How much is the interest on capital we had seen? It is 16,000. Yes, it was 16,000, 14,000 and 10,000. So 16,000 credit, 14,000 credit and 10,000 credit. If we are giving it to the partners, so obviously it will be debited by the firm. So this is 16 plus 14, 30, 30 plus 10, 40,000. 40,000 is debited. Interest on drawings. Next is interest on drawings. Interest on drawings charged is again 10% per annum. So how much is interest on drawings? 50,000, 60,000, 30. So 5,000 is the interest on drawings, but it is per annum. So we will take half of that. Whenever per annum is given, we take according to the average period. We take the average period. So 5,000. So for 5,000, half of this is 2,500. This will be debited because we are charging it from the partners. This is 6,000, half of this is 3,000. Debit. 3,000, half of this is 1,500. Debit. So total is 5, 6, 7,000 will be credited over here. 7,000 will be credited. Okay. So how much is the total now? If we see, it is 40,000 and credit is 7,000. So this debit amount is 33,000. So share of profit, just check this, share of profit among partners. How much profit we had? We had 1 lakh, right? Out of 1 lakh, credit is 7,000. Okay, credit is 7,000, debit is 40,000. So simple thing what you can do is 1 lakh net profit plus interest on drawings 7,000 minus 40,000. This is actually 67,000. 1 lakh 7,000 minus 40,000. Sorry, it is 67,000. Now we are going to give it to Asha. 67,000 into 2 divided by 5. She gets is 26,800 as share of profit. Next is Nisha. Nisha 67,000 into 2 by 5. Into again 2 divided by 5. Same amount 26,800 credit. Next is Disha. Disha will be again 67,000 into 1 divided by 5. She gets is 13,400. And here you are going to 67,000 we are going to show debit. Now let's check individually how much they are getting. Okay. From here, this is the wrong part that we have given. Okay. This is the wrong part. By mistake we have divided the profit, 1 lakh profit in this ratio without any adjustments. This portion is the correct one. Now Asha is supposed to get 16,000 as her interest on capital, plus she will get 26,800 as her share of profit, and we are going to minus this from her share, that is 2,500 minus. So she will get is 40,300. By mistake we had given 40,000, but she is supposed to get 40,300. Additionally, her how much we are going to give her? 300. If her capital will increase, we are going to credit. Okay. If the person receives the amount, that the partner receives the amount, we are going to credit. Next is Nisha. Nisha will get 14,000 plus her share of profit 26,800 minus her interest on drawings, that is 3,000. So Nisha will get 37,800. So already she got is 40,000 and she is supposed to get only 37,800. We are going to minus or add. We are going to minus because she got more. We are going to minus 2,200. So it will be debited. Disha got 20,000. She was supposed to get 10,000 plus 13,400 minus 1,500 her interest on drawings. 21,900. Okay. She was supposed to get 21,900. She got only 20,000. We are going to give her addition how much? 1,900. So it will be credited. Just check 1,900 plus 300, 2,200. So these two partners will be getting and Nisha will be given. So the journal entry will be Nisha's capital account debit. Nisha's capital account debit with 2,200 to Asha's capital account 300 to Disha's capital account 1,900. A simple one. This will be for 3 marks. Fine. This type of problem comes for 3 marks. Check. Illustration 47. This is page number 1.61. It says Anand, Riddhi and Sham are three partners in the ratio of 2:2:1. There is Anand, there is Riddhi and Sham. Their share of profit is 2:2:1. It's the favorite share. Fixed capital. So whenever we pass the journal entry, if it is a fixed capital, then we pass the journal entry for current account. Partners current account. So their fixed capital is 1,60,000 and 40,000. For the year ended 31st March 23, interest on capital was credited to their capital account 9%. So we have given interest on capital 9% per annum. Instead of 7% per annum, we had to give how much? 7% per annum, but we have given 9%. Let's check. Per annum. Okay. Again, we'll prepare a table for this. Adjustment table. Past adjustment table. Three partners are there. So 3 columns with total. This is Anand, this is Riddhi, this is Sham, and this is total. Okay. So, particulars. This is Anand, Riddhi, and Sham. Total. First thing is, what wrong we have done? The mistake that we have done is, we have given the interest on capital 9%. So, first is interest on capital at the rate of 9% given wrongly. We have given it wrongly. Okay. So, 9%, which means we are going to debit that again. We are going to lower that much amount of their capital account. 9% of 1 lakh is how much? 9,000. 9% of 60,000, that is 5,400. 9% of 40,000, 3,600. So this is the part of, this is the interest on capital that we have given it to the partners wrongly, 9%. So how much is the total? 10, 5, 6, 7, 8, 9. 18,000 is the total. 18,000. So again, this capital will be credited. We have debited their capital, which means we have taken away from them. Okay. Now we will see what is the correct one. So the correct one is interest on capital should be 7% per annum. 7% of 1 lakh, 7,000. 7% of 6,000, 4,000, 60,000 is 4,200. 7% of 40,000, 2,800. So the total will be 8, 9, 4, 5, 6, 7, 14,000. Okay. This is what we had to give. We had to give the partners, and this will be debited from the firm. This is wrong one. The top that I have written is the wrong one. This is the correct one. Okay. Now, out of 18,000 that we had given previously, right? Out of 18,000, 14,000 now we have given correctly 7%. What about the remaining 4,000? Remaining 4,000 we are going to distribute that as share of profit in this ratio. So remaining is how much? 4,000. So this 4,000 balance, that is 18,000 minus 14,000. 4,000 will be distributed in the ratio of 2:2:1. So 4,000 divided by 5, that is 4,000 divided by 5, total 5, 800. 8 2s are 1,600, he will get share. 8 2s are again 1,600 and 8 1s are 800. This is what they will get. Okay, what we have done, previously we had given 18,000 by mistake, but we had to give interest only 14,000. So the balance that 4,000 was there, we have distributed that as share of profit in the ratio of 2:2:1. Okay, now take the total of this. He will get correctly 8,600. Before he got 9,000. So 8,600 which he is supposed to get. 9,000 minus 8,600. 400 we will debit from his pocket. We'll take away from him. His total is 5,800. He got 5,400. He is supposed to get 5,800. We want to give him more 400. His capital will increase. So plus 400 credit. His was 3,600 and now also it is 3,600. No changes for Sham. Fine. So what will be the journal entry over here? The journal entry will be, you are going to debit Anand and credit Riddhi. So Anand's current account debit 400 to Riddhi's current account 400. This will be the journal entry.